The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Happy Tuesday. Welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. Great to be with you as usual. Couple of reminders like I do at the start of every show. First of all, the phone number if you want to talk to me. That number is 877-927-6648. 877-927-6648. You can catch my show daily on TFNN from 3 to 4 Eastern. If you can't listen live, head over to iTunes. You could pick it up as a podcast. I always mention that the App Store on the at iTunes or on your iPhone, you can get some good apps that deliver podcasts directly to your phone. That's a good way to check out Breakout Investing as well. And you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. If you're listening at your PC, avail yourself of Tiger TV. The show is carried live on Channel 1. It is archived on Channel 13. If you watch Tiger TV, not only do you get the audio of the show, but you can also look at charts live right along with me. So a decent day for stocks on Election Day. Head out to the polls, cast your vote for president. Right now, the Dow Jones Industrial Average trading up near its session high, up what is that, about 142 points, 1.1% to 13,254. The Dow never quite got down to its 200-day moving average, but it will be interesting to see if this 50-day line here at 13,344 eventually proves to be a resistance level. We are only day two of a rally attempt for the Dow. Yesterday it hit the intraday low, took out the prior low over here. So day two of a rally attempt. Still looking for a big percentage gain, bigger than what we're seeing today. When you get market follow-through, when you get confirmation of a new uptrend, when you get a buy signal with conviction, generally that's going to come in the form of a big percentage gain of at least 1.5%, preferably 1.75%, 2%, or even more in higher volume. Now, volume is higher today than yesterday. That's a good sign. There is some mild accumulation going on in the major averages, but still a lot of stocks under a tremendous amount of pressure today, many on disappointing earnings. Right now, volume on the New York Stock Exchange is tracking about 12% higher than what we saw on Monday. And Monday's volume on the NYSE was below average at 597 million. Good increase in trading volume on the NASDAQ today, tracking about 20 to 25% higher than what we saw Monday, which was also below average at 1.46 billion shares. So right now the Dow up 1.1%, not too bad a performance. The S&P 500 is up 0.1%, a little more than 11 points to 1428. Here is the S&P underneath its 50-day moving average, which could end up being a resistance level. We'll have to see how trading plays out over the next few days. And the NASDAQ Composite, let's see what the tech index is doing today. It is still firming up at its 200-day moving average here, lagging a little bit, up 11 points, 0.4% to 3,010, almost 3,011. Inside the Dow, a couple of interesting technical setups here. I know a lot of you do follow blue chip stocks, and there are some interesting setups out there. Two in particular in the Dow, Johnson & Johnson, in a nice setup here, flirting with a breakout over 72.74. That would be the swing point set here after 5 straight gains. Hits a high of 72.74 earlier this month. It has been drifting sideways lower. So if this market gets going between now and the end of the year, Johnson & Johnson has a very nice technical setup here that could work. Also in the Dow, got to keep watching the financials here. JP Morgan Chase in particular. It has been moving higher, but technically very sound here, still holding above its 50-day moving average. Possible breakout taking shape in JPM over 43.54. That would, again, be the high set right here earlier this month. So not a whole lot of great-looking charts in the Dow, but the two that jumped out at me were Johnson & Johnson and also J.P. Morgan Chase. We've been talking about the XLF, the Financial Select Sector Spider Fund, how that has been hanging in there, kind of a similar technical setup to JPM, not surprising, but really has been respecting its 50-day moving average here, still sitting close to a high. So the financials still trying to assert strength in this market that actually is still in a downtrend until proven otherwise. So on a day like today, when you see the Dow up more than 1%, you see decent percentage gains for the major averages. It is tempting to put money to work, but I got to tell you, I'm going through my screens on a all day. I've been going through my screens and seeing very, very little out there that looks interesting to me in terms of buying opportunities. But that's just my investment style. I'm looking for stocks with a good combination of fundamentals and technicals, not just strong technicals alone. Certainly those stocks are out there, but when you see a bullish chart and then you see decelerating sales growth, or you see weak return on equity or decelerating earnings growth, I really like to have both fundamentals and technicals align before I add a stock to my ultimate growth stocks model portfolio. So in the Dow, Johnson & Johnson and J.P. Morgan Chase look interesting. Let's check in on shares of Intel. This stock was lower in after hours yesterday for a little while. It is lagging today, down about 0.5% to 21.74. Talk about a stock that can't get out of its own way. Late Monday, there were reports that Apple might be considering a switch from Intel to its own chips for future Mac computers. That is unsubstantiated at this point, but it is weighing on shares of on Intel, and actually Apple as well, because Apple once again is lagging the market, down underneath its 200-day moving average. You see it hit an intraday high today of $590.74, but is trading near its session low, down $2.74, about 0.5% to $581.88. So Apple still cannot get out of its own way. Yield on the 10-year note slightly higher today, 1.74%. 30-year bond up as well to 2.92%. U.S. dollar index down, but not by much, 80.57, down about 18 ticks. Not much of a decline, only about 0.2%. Weak dollar brought buyers into gold today in spades. Gold up $31.80, 1.9% to $1,715 an ounce. That rally in gold sparked a nice rally in Randgold Resources ahead of its earnings report tomorrow. Take a look at GLD, firming up nicely here at its 50-day moving average. Another good technical setup here. Randgold tomorrow is expected to earn $1.28 a share. That would be up 11% from a year ago. Sales up 19% to $366.5 million. So Randgold acting well ahead of earnings tomorrow. Crude oil up $3.06, also a beneficiary of a weakening dollar today. 3.6% upward move for oil to $88.71 a barrel. Some of these refiners still looking interesting here. Take a look at CVR Energy. This is one of the leaders in the group. Broke below its 50-day moving average on Friday when we really had a very bearish session for the major averages. Monday it rallied, and today not a whole lot of volume, but it is back above its 50-day moving average. So interesting action in CVR Energy. Nice technical breakout today in EOG Resources. Late Monday, this oil and gas producer reported strong earnings, but you look at its price action today, and when you're in a healthy market, when you're in a market where new money is coming in from the sidelines, institutions are putting money to work, you see gaps up like this, you don't typically see them give back all their gains and trade near session lows. We've been seeing a lot of that lately, and I think it's really a function of the type of market that we're in. EOG is still up 4.25% today to 121.77, but it is trading very close to its session low after hitting an intraday high of 124.49. Superficially, it just tells you the fact that it's near its session low that there are sellers in the stock after early strength. It is still up 4.25%, but the numbers were much better than expected at EOG, and it's a very busy week of earnings, particularly in the E&P space, exploration and production space. Earnings at EOG Resources came in at $1.73 a share. The consensus estimate was for earnings of $1.12. That was up 108% from a year ago. Sales only up 2% to $2.95 billion, but that was better than expected as well. Here's a look at another oil and gas producer, lesser known, Carrizo Oil and Gas. Technically very weak here, which is strange because this company is growing like gangbusters. A very, very strong quarter here, but technically very weak stock. It is down 3% today to 25.21. Listen to this earnings growth, up 83% from a year ago, 44 cents a share. That was 5 cents above views. Sales up 86% year over year to 96.2 million. That was actually a little bit below the consensus estimate, but annual earnings this year are expected to be up 80% from 2011, and next year annual earnings at Carrizo should be up 119%. So this is a company where earnings growth is not a problem here. You have to wonder, I haven't done enough work on CRZO to find out why it's kind of lagging, but most oil and gas producer charts, most charts in the exploration and production space is very hard. EOG is kind of the anomaly because a lot of charts look like Carrizo's. Pretty decent growth prospects, but they're just, the buyers are not coming into this area of the market. Tomorrow, another fast-growing oil and gas producer, Continental Resources. This is a company that is expected to grow annual earnings 21% this year, accelerate next year in 2013, 40% earnings growth. It is working on a two-session winning streak, up 2.6% today to 75.85 ahead of earnings tomorrow. Earnings should come in at 87 cents a share, up 28% from a year ago. Sales up 44% to 610.8 million. Also going to keep an eye on Bonanza Creek Energy. This one has weakened a bit. Pretty nasty reversal in heavy volume for the stock yesterday. It is down another 1.4% today to 24.50. Again, you had the very strong numbers from CRZO that we just talked about. Very similar growth at Bonanza Creek Energy. This company is a small cap E&P firm based in Denver. Earnings expected to be up 217% from a year ago, 38 cents a share. Sales up 115% to 59 million. So it is on the speculative side, and I do not like that heavy volume reversal that the stock experienced yesterday, but they will be out with earnings on Thursday. Very quiet week of economic data. Tomorrow we've got consumer credit, weekly jobless claims, trade balance due Thursday, Friday import-export prices, and the first reading on Michigan consumer confidence for the month of November. So pretty quiet. We do have the election. Who's going to be the next president? We'll know later tonight, tomorrow morning. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Ken Shreve with you. 877-927-6648. That is the number to use if you want to give me a call, talk about this market. Let's check in on the major averages here. Dow off its highs, but not by much. It is up 1%, 135 points to 13,247. This is the index that is outperforming today. S&P 500 is next, up 11 points, 0.8% to 1428, and the Nasdaq up about 10.5 points, 0.4% to 3,010. Today marks day 2 of a rally attempt for the Dow. Just touched on that earlier in the show. Day 6 of rally attempts for the NASDAQ Composite and the S&P 500. I am sitting in a fairly stealth cash position in the Ultimate Growth Stocks model portfolio. I do not believe in buying growth stocks during market downtrends. That is an easy way to lose a lot of money quickly. So at some point, new money is going to start coming in from the sidelines, and new leadership is going to make its presence felt. I'm optimistic that we could see a buy signal sooner rather than later. And if that happens, and it is a buy signal with conviction, I don't want it to be begrudging on the fence. I mean, a 1% gain for the Dow today is pretty nice, but when you get meaningful follow-through, a meaningful confirmation of a new market uptrend, that percentage gain, whether it's in 2 indices, 3 indices, 1 indices, it has to be with conviction. At the very minimum, 1.5%, preferably 2% or higher. Who knows? Depending on the election results, it could happen as early as tomorrow. It could take several more days. But now is not the time to stop paying attention. You want to be keeping track of stocks that are holding up well, showing strength and support. And I sent out my weekly update earlier today for Ultimate Growth Stocks and have several stocks there on the watch list. So I'm not ready to buy them yet until I get a buy signal from the market. And if you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Just click on Try Out Ultimate Growth Stocks. It's in the breaking news section, red letters. You can't miss it on the homepage. 30 days free to check out my growth stock newsletter. Some notable short squeezes in the market today. Let's take a look at some growth names on the move. How about Thor Industries? They did not report earnings today, but they reported preliminary sales for the third quarter. This is a maker of RVs and also small and mid-size buses, but the company derives the vast majority of its revenue from RVs. They announced preliminary revenue of $876.8 billion. You know what the consensus estimate was? $735.9. So almost 150 million above the consensus estimate. So no surprise to see Thor Industries today up 10.2% to 41.68. Now, let's check out a weekly chart for Thor Industries, THOR. Thor Industries. Here we go. Very extended stock now. The last time to buy Thor was when it broke out in September over 33.80. Here was actually a pretty nice cup with handle breakout here. Here was the swing point right here of 33.80. Technical breakout at 44.18. This is a very extended stock, so you do not want to chase it up here. A lot of extended stocks out there. After Hurricane Sandy, certainly Generac has been moving higher and doing very, very well. Generac makes standby power generators. Last week, when the market first opened, after it was closed Monday and Tuesday, shares jumped 20%. You can see last week's trading made a big move. Generac was up 20% on Wednesday. The company, actually, when the market opened on Wednesday, they also reported earnings. So kind of ironic, but earnings were only up 4% to 78 cents a share. Sales were up 26% to $300.6 million. But this is another example of a stock that you just don't want to chase up here. Very, very extended. Constructive action from here would be if GNRC just starts to move sideways. Typically, when a stock breaks out, if it pulls back to its 10-week moving average and finds support, that's generally a good opportunity to add to the position. But Generac's going to have to fall about 10 points or so to get down to its 10-week moving average. So it may not do that, but it could move sideways for 4 to 5 weeks, maybe correct about 5-10% off its recent high. You get a little flat base form and you get another opportunity to buy. But names like THO, GNRC, do not chase them up there. They have run too far, too extended. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Talked about preliminary revenue guidance from Thor Industries, a maker of recreational vehicles. This is such a counterintuitive move for the stock. It's been an outstanding performer, but in an economy where that still seems a bit unsettled with high unemployment and people kind of pinching pennies. These RVs are not cheap cars, but Thor Industries continues to come out with good news. Their revenue guidance for the third quarter was about $140 million above the consensus estimate. So they're going to be coming out with earnings later this month, late November, 28th, 29th, 30th, something like that. But again, it is an extended stock. Now, there's an ancillary play here, Drew Industries. This is a speculative stock, $750 million market cap, average daily volume 130,000 shares. But remember, we're talking about these stocks that are breaking out and then reversing and finishing down near lows. Look what Drew Industries is doing today. It is now up 1.7% to 32.83. At one point earlier in the day, this really looked like it was going to be a good, solid technical breakout. This is a company that makes components for RVs, so directly related to Thor Industries. But again, speculative stock here, $750 million market cap, thinly traded too, with an average daily volume about 130,000 shares. And after early strength, it has reversed and is trading near its session low. So not the best day of trading for Drew Industries, but this is a company with outstanding fundamentals despite its small cap status. Excellent earnings and sales growth in recent quarters, and fundamental metrics really across the board are very strong at Drew Industries. So interesting company, not the best price action today. Another short squeeze going on in shares of Weight Watchers, WTW. Very well-known brand. Look at the move this one's making today. Up $7.60, up 16% on the day to $55.08. I have my friend Bob Lang from ExplosiveOptions.net on the show occasionally. I know he's doing well today. He had a straddle, I believe, on this, headed into earnings that is paying off nicely today. So Weight Watchers, big short position in Weight Watchers headed into earnings. They made $1.20 a share. That was 13 cents above the consensus estimate. Sales only up 1% to $430.6 million, but that was nicely above the consensus estimate of $418.7. Another little short squeeze going on in shares of Myriad Genetics. This is a high quality company. Pretty good fundamentals here. Stock up $4.15 today. 15.5% move for Myriad Genetics today. Last trading at $31 a share. The company, it did have a nice technical breakout today over 28.58. That's the swing point set here in late September, early October. Tough to chase up here. It does already look extended in price after the breakout over 28.58, but earnings were up 24% from a year ago, and sales were up 21% to $133.4 million. But fairly large short position in this name ahead of earnings, so probably a lot of short covering in the stock today. Another stock with a big short position headed into earnings. Well, the numbers were outstanding at Vitamin Shop, VSI. Big move for this stock today, up 15%, $7.98 to $61.28. This is a well-run specialty retailer, direct marketer of nutritional products. Earnings were up 35% from a year ago. They beat the consensus estimate by about 8 cents. Sales up 14% to $239 million. That was also above expectations. Vitamin Shop same-store sales up 9.6% in the quarter. Company operates 560 stores with plans to open another I think it was 57 in 2013. So it looks like they're going to try to expand by about 10% in 2013. Arguably still a company in the early stages of growth here. Look at Vitamin Shop on Friday. Decidedly bearish day of price action. Huge intraday spread, crashes below its 50-day moving average. The selling accelerated yesterday, so it was just acting very, very poorly ahead of earnings. Would have been a tough buy, so close to earnings, but hey, if you threw the dice, you would have been rewarded today. Big 15% move for the stock. And finally, another short squeeze going on today. Let's check out Medifast, MED. Similar business. They sell weight management products. Not quite the same business as Vitamin Shop, but very nice move in the stock today, up 8% to $28.98. And, gap up, stock definitely under accumulation, not only yesterday but also on Friday when most stocks were selling off, finishing near session lows. Medifast was up on the day, so it's working on 4 straight gains. Numbers pretty good here as well. Very speculative name though. Market cap $450 million, thinly traded as well, but earnings were up 44% to 52 cents a share. Sales up 20% to 91 million. Bullish guidance as well. So not a bad looking chart here. Bullish technicals. Maybe a stock you want to take further look at. Other earnings reports, some more liquid, kind of higher quality names. CF Industries, numbers not too bad here, makes nitrogen and phosphate fertilizer products. They beat the consensus estimate by about 15 cents with profit of $5.85 a share, up 13% from a year ago. Sales down 3% to $1.36 billion, slightly above expectations. Here you can see though a stock that is stuck underneath its 50-day moving average. Probably looks to me like it's going to be basing and consolidating gains for a little while. So good day for the market today, but boy, I'll tell you, some stocks have really, getting taken apart here. How about Express Scripts, down almost 13% today to 54.86. When you're a publicly traded company and you say that analysts earnings projections for 2013 are, quote, overly aggressive, unquote, that is probably going to bring some sellers into the stock, and it's exactly what's happening today in the provider of pharmacy benefits management services. Express Scripts earnings were up 29% from a year ago to $1.02 a share. That was 3 cents above views. Sales up 133%. Big sales growth helped by its acquisition earlier this year of Medco, but sales at $27 billion were a little bit below expectations. So really rough day for shares of Express Scripts, and an equally rough day, if not more so, for shares of Zillow, down 18.2% to 28.11. The importance of stops, folks, I know on the TFNN radio network you hear a lot about stops. I know Tom talks about stops and Steve talks about stops, and stops are vitally important. You just can't call yourself a long-term investor in today's fast-moving markets and refuse to use stops. What invariably happens is that a small loss spirals out of control, and it can do catastrophic damage to a portfolio. So anytime you buy a stock, you want to have an idea where you're going to sell it in case things go wrong. And, I used to own Zillow in the Ultimate Growth Stocks model portfolio. Back in August and September, the stock was acting very, very well, looking like it was moving higher. And, I actually bought it at $43 a share. I don't remember if it was in August or September, but I remember the buy was around 43, and I remember getting out of town when it hit 40. So I sold it for a $3 loss. Yeah, it hurt. It never feels right to take a loss in a stock and lose money. But selling Zillow at 40 and to see the stock at 28 right now, I know it was the right thing to do. So it's one key strategy I practice with my model portfolio, is that I never let a small loss spiral out of control. And you can take a series of small losses, and conceivably you can be wrong 7 times out of 10 and still be outperforming the market, or 6 times out of 10. You just have to latch on to the one big winner and make that one work for you. So cutting losses is part of the game, and it does protect the portfolio from unnecessary losses. So glad to be out of Zillow at 40 when I just felt the stock was not acting right, and it turned out to be the right decision. Take a look at shares of Fossil today. FOSL. Fossil's really come on hard times lately. You can see in recent days, before today, it was that 200-day moving average was kind of a ceiling here, significant resistance. Stock is down 11.3% today to 83.50. Nothing new here. The company, it's another quarter of decelerating sales growth. Sales were only up 6% to $684.2 million. That was almost $30 million below the consensus estimate. Soft sales in Europe not a great outlook. Their bottom line beat by, what was it, about 12 cents. They beat $1.28 a share above the consensus estimate of $1.16. But Fossil, a broken stock, headed into earnings, and an even more broken stock now. I thought DirecTV's technical picture was very suspicious ahead of earnings. I wrote about it. In fact, it was facing resistance at its 50-day moving average here. The stock came down today, touched its 200-day moving average at 48.63. It is up near its session high, but still down 30 cents to 50.36. DirecTV, the story here is Latin America revenue. This is a fast-growing area for the company. Only rose 16% to $1.58 billion. Average monthly revenue per subscriber in Latin America fell 13% to about $56. It added 543,000 customers in Latin America, but that was down 5% from a year earlier. About a third of DirecTV's subscribers are in Latin America. So investors responding, to its credit, the stock is up near its session high after early weakness, but still a stock here that looks like it's going to base and consolidate gains for a little while. Competitor Dish Network. Remember these two companies, Dish, DirecTV? They were, I think it was way back in early 2000, 2002, something like that. They were trying to merge, but there were antitrust concerns and all that. Dish Network acting a lot better than DirecTV, much healthier chart headed into earnings. It is up 3.5% today to 36.04 after hitting an intraday low of 34.14. Earnings were down 8% from a year ago to 65 cents a share, but that was 10 cents above views. Sales down 2% to $3.5 billion. So Dish definitely the better looking chart out of the two. And also NSM, Nation Star Mortgage Holdings, very busy day of earnings, as you can see. A lot of institutional selling. If you want to look and see what institutional selling looks like in a stock chart, look at some of these mortgage service providers. Nation Star Mortgage Holdings down 11.1% today to 26.86. Look at the company's fundamentals. You'll say, what's wrong? They made 64 cents a share. That reversed a year ago loss of 3 cents. Sales up 205% to $277.2 million. That was nicely above estimates, and it was the third straight quarter of accelerating sales growth. Not helping the stock here. I would not touch this one with a 10-foot pole. And again, these mortgage companies, Altisource Portfolio Solutions, will see that it is not nearly in as bad a shape as Nation Star Mortgage Holdings, still holding above its 50-day moving average, but still some big sellers in this stock as well. And Altisource down 89 cents today to 106.74. And then OCN, this is Ocwen Financial, it's still holding above its 50-day moving average as well. So if you want to look at these mortgage service providers, I would not be looking that closely at NSM anymore, perhaps ASPS, OCN, because technically they're still intact, holding above support levels. So that's what you got there. I want to take a look at Jazz Pharmaceuticals, JAZZ. Here's a drug maker that is holding above, just not by much, holding above its 50-day moving average today, underperforming, down 3.1% to 53.59 ahead of its earnings report Thursday after the close. Big quarter of growth expected here, with earnings up 40% to $1.32 a share. Triple-digit sales growth expected, up 145% to $179.6 million. Its flagship drug is Xyrem, spelled Xyrem, used to treat narcolepsy, excessive daytime sleepiness. Will it be able to hold its 50-day moving average? Under a lot of selling pressure, still holding support, but obviously some apprehension. We are in an unsettled market here. There's no question about it. You're seeing stocks that are, trying to move. They're having problems moving, and in a day like today where you've got some decent percentage gains in the major averages, I'm a bit surprised that my screens aren't looking aren't looking a little bit better. If the market were really acting healthy here, you should start to see, buy opportunities start to multiply. There are some out there, but by and large, it's still a very sketchy market here where until we're in a confirmed uptrend, the risk outweighs the reward. Dow up 134 points, 13,246. NASDAQ up 11 points to 3,010. S&P 500 up 11 points to 1428. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing. 5 minutes left to go in Tuesday's session. I'm very interested to hear what Rackspace Hosting has to say after the close. It's going to be coming out with third quarter results. A very real growth story going on at Rackspace Hosting, and a stock that technically is looking quite healthy in front of earnings. Now, I've seen a lot of situations where technically healthy stocks ahead of earnings fall apart, and I've seen situations where very weak stocks technically take off to the races after they report. So very risky buy. You know, it's maybe 10, 15 years ago you could say, well, this stock is acting well, it's under accumulation, I'm going to buy it ahead of earnings, and boom, it takes off. But these days it's not that easy. But I'm expecting pretty big numbers from Rackspace when they report. Look for a profit of 19 cents a share from the provider of cloud computing services. Earnings of 19 cents a share would be up 36% from a year ago. Sales up 27% to $335.9 million. Now, you look at annual earnings growth at Racks, 36% growth in 2012, 75 cents versus 55 cents in 2011, and growth is expected to accelerate in 2013, up 45% from 2012. So growth like that, you have to pay attention to. It's a high multiple stock, but when you're growing like that, you're deserving of a high multiple. So like the way Rackspace looks, we'll see what the numbers look like after the close. Also after the close, here's another high-quality name, Middleby. Middleby makes convection ovens, steamers, cooking equipment for restaurants and institutional kitchens. In fact, if you get a sandwich every now and then at Subway, you'll see that Subway has these Turbo Chef ovens that are they heat things super fast. That's also a Middleby product. But big sellers in the stock yesterday, sellers also in the stock Friday, and it is near its session low today, but still up 97 cents to 120.70. So still holding above its 50-day moving average, but an outstanding track record of growth, solid fundamentals at Middleby. Look for a profit of $1.53 a share, up 21% from a year ago. Sales up 17% to $255.9 million. Mentioned earnings from CF Industries earlier today. We'll see that CF Industries is below its 50-day moving average tomorrow before the open. An industry group peer of CF Industries, Agrium, AGU, is going to be out with earnings. Look for a profit of $1.84 a share, flat from a year ago. Sales down 1% to $3.1 billion. Agrium continues to act very well in this market. It hasn't all been good news in the fertilizer space. Again, CF Industries looking a bit tired, basing. Agrium continues to hold near highs. So looking pretty good here. Also before the open, another oil refiner, Holly Frontier, HFC. Some institutional selling in the stock recently, but look at the move it's making today, up 2.9% to 40.06, back above its 50-day moving average, building the right side of the base here. And we'll see what Holly Frontier has to say tomorrow morning. And then remember SodaStream, SODA. A lot of people swear by this product, but stock not looking too good ahead of earnings here, down 57 cents to 34.25. Say what you will about SodaStream, but it continues to grow quickly. Earnings at the company expected to be up 29% from a year ago to 72 cents a share. Sales up 33% to $103.5 million. Growth prospects look good going forward for this company as well, but technically a mess. Coming up next, the Tom O'Brien Show, folks. Thanks very much for listening. Always appreciate it. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great afternoon.
Let me tell you something, folks. I have people coming up to me saying,